Welcome back. The White House weighing new rules that could upend shareholder voting power. An executive order would limit influential proxy advisors and restrict how index fund giants cast votes on behalf of investors. Executives such as Elon Musk and Jamie Dimon have both argued in the past that firms hold too much influence over corporate decisions. Joining me now is the chairman of the Securities and Exchange Commission, Paul Atkins. Mr. Chairman, welcome back to the program. Good to see you, sir.
Good to see you too, Maria. Thanks for having me.
And when you first started this new role, you told me straight out that you were going to look at these proxy advisors. Tell us what you're considering here in terms of those proxy advisors' influence.
Well, Maria, it's a very important issue, and in the first Trump administration, the SEC adopted rules that were directed at these particular companies, but those were challenged, and the Circuit Court in the District of Columbia basically put those on ice. And so now it's time to focus on this particular area of corporate governance. And about a month or so ago in Delaware, I outlined some steps that we will be taking, but with respect to corporate governance and shareholder proposals and really the abuse of the corporate governance system and the weaponization of shareholder proposals by politicized shareholder activists. And so these particular advisory companies play a role. The charges of conflicts of interest are really legion, the stories of those. And so we have to address this issue overall.
Well, I mean, look, it's a real balance that you need to walk, because it's not just firms like ISS, which are giving shareholders, you know, their recommendation, do this deal, don't do this deal, fire the CEO, vote yes or no on his salary or her salary. But it's also companies like BlackRock or Vanguard or State Street, these companies that are, in many cases, the largest shareholder of certain companies just because of the volume of their business. So are you including those companies in this address to this shareholder proxy companies' rulings?
Well, we intend to look at the whole process, and so with respect to the institutional investors and those sorts of money managers, you know, they are passive investors, is how they position themselves in the marketplace, and with SEC, with their filings with us, declare that they're passive holders. So where they get out of line, I think, is where they act to try to influence management. And that's just not their role. And so we'll be looking at you know, this entire area and come out with proposals and clarifications and that sort of thing. Very,
very interesting. And what's the timing on that, Mr. Chairman?
Well, obviously, it'll be in the next year. We're back to work now after a shutdown of 40-some days. So I know the staff is, you know, excited to be back and back to work, and we have a lot to catch up on. So that's thrown us off a bit on our, you know, our timeline for various things. But obviously, we're back at the desks and back doing our job.
Yeah, I mean, we were focused on this part of the shutdown a lot, actually, during the 43-day shutdown, because federal workers are finally back at their jobs and set to receive the back pay. But it was the capital markets activity that we were focused on. Of course, you saw IPOs and M&A picking up earlier in the year. But the shutdown brought the new IPO filings and corporate financings to a standstill. Can you talk to us about what you believe is on the shelf, Mr. Chairman, in terms of, you know, IPOs, new filings, and deals that you're going to get to in terms of how you're prioritizing things? Should we expect the backlog and now the floodgates to open? Give us a sense of the activity that you're looking at.
Well, there are about 500 some registration filings that have come in to us, and that we'll get to you know, as quickly as possible now. And during the shutdown, we were able to kind of go back to basics, and about a handful of IPOs, you know, commitment, firm commitment underwritings went public using the old original process of basically filing the registration statement, these companies had already had some comments from the staff, and we told them that they could go ahead and pull what we call a delaying amendment, and they could go public within 20 days. And there's still some in that queue that did that, and so those will continue to go according to that kind of process. But we're going back to reviewing the filings that are in, and so we hope to have those cleared and hope to get back to normal activity as soon as possible.
Very good. And you're also getting back to activity in crypto, the SEC rolling out new frameworks for crypto regulation. This token taxonomy aims to clarify which digital assets qualify as securities and which do not. Mr. Chairman, we've been talking about this for a little while now. You've said in the past most crypto tokens traded today are not securities, and tokens can transition out of security status as networks decentralize. Walk us through what exemptions will look like and what you're trying to achieve here.
Well, so I'll refer to, I gave a speech a couple of days ago at the Philadelphia Fed at a conference that they had. But basically, unfortunately, for the last, several years now, the industry has been operating in a fog. They couldn't really figure out what the SEC was looking for and how this new technology could be accommodated within the ancient rules that applied to paper filings and paper stock certificates and that sort of thing. We're talking about now, digital assets and that sort of thing on chain. So what we need to do is focus on the basics again. What are securities and what not, and then collaborate with our sister regulators. Most importantly, the Commodity Futures Trading Commission. So if you divide the taxonomy that I outline, and obviously this is my views, and we'll work through notice and comment rulemaking ultimately on all of this. But if you have digital commodities, digital collectibles, digital tools, and finally tokenized securities, and the first three are not securities, and tokenized securities obviously are. So the rub comes in defining, what is and is not a security, and so that's what we are, setting out to do. But basically, the token itself is not necessarily the security. It represents the security. And there's one particular type of security called an investment contract that has been bedeviling the industry and the SEC now ever since tokens started coming out, sort of a decade ago. And so it comes out of a Supreme Court case back in 1946 regarding orange groves. So that's hardly apposite really to things currently, but we will take steps to help define that, so that's where tokens can be part of a series of promises, but those promises can be fulfilled, can go away, and so a token is not always a security.
This is so exciting, Mr. Chairman. Thank you for taking this on. I want to get your take on something else we've been talking about this morning. I just had John Molinar on, the chairman of the China Select Committee, and pressure is building over American investors buying Chinese stocks and supporting and helping to fund the expansion of our number one adversary. Morgan Stanley is now being questioned by House lawmakers over this Zijin Gold International IPO in Hong Kong, a subsidiary of Zijin Mining Group, which is on the U.S. government's Uyghur Forced Labor Prevention Act entity list. And we just spoke with John Molinar, who said that investors are unknowingly funding entities posing national security risks. Here is the chairman of the committee just a few moments ago. Watch.
It's time that Wall Street stops funding our demise, and it's time that American investors wake up to this reality. I was shocked when I found out that our retirement for the federal government was invested in entities that were affiliated with the Chinese military-industrial complex. We don't want to fund entities affiliated with slave labor, and we don't want to help the Chinese military-industrial complex because that can be used against our men and women in the armed forces.
Mr. Chairman, you understand, obviously, what's going on here because the Chinese Communist Party is double-crossing the U.S. again, basically saying we're not going to send the rare earth minerals to any company that's tied to the U.S. military. So why are we allowing our investors to fund the expansion of our number one adversary, which are companies that are tied to their military? What are you and the SEC doing to support and implement the president's America First agenda on this?
Well, we have limited tools. Of course, we're mainly a disclosure agency, and we, then have enforcement tools built around all of that and anti-fraud. But so we have, after I first came aboard about 6 months ago, we came out with a concept release looking at what we call foreign private issuers who are registered in the United States, and clearly there's some who are, I think, stretching the bounds of what that whole process was first, built around back, several decades ago. So we have asked for comment on that and to focus on firms that are using, say, our stock exchanges as their primary listing, but they're incorporated maybe in the Cayman Islands and then operations mainly in China. And here recently, over the last several weeks, we've taken actions to stop trading on what we saw as very suspicious activity in trading around penny stocks, I'll call them, on NASDAQ. And so there are about 10 of those that we've just won recently here the other day, earlier this week, where we have stopped trading to prevent investors from being harmed. So this whole area we're looking very intently at, and I intend to use the tools that we have to clean it up.
I mean, this is about money. I mean, that would be the first thing to, show China that they can't keep double-crossing the U.S. Mr. Chairman, real quick, is it still true that Chinese companies do not have to follow the same American accounting standards to list on our exchanges? They don't follow the same rules as American companies, right?
Well, I think it probably depends on the company, so I can't speak about all of them. There are 200 some, perhaps, that are listed here. But basically, there's another. We have generally accepted accounting principles here in the U.S. That our Financial Accounting Standards Board and the SEC look after. There's another set of accounting principles internationally, the International Financial Reporting Standards, IFRS, that other foreign companies tend to use. And we've basically, the SEC back in the 2007, basically looked at those as functionally equivalent. We're looking at all this again in the context of this notice and comment that we've put out.
We so appreciate it, Mr. Chairman, because it's a head scratcher as to why Chinese companies get a pass when it comes to the regular accounting standards that every other American company who's a public company have to follow. I don't understand why China gets that pass. I know President Trump has a lot of levers to pull to push back on their aggression.
I agree, and we're out. I don't want people to be laughing at us because our investors are being disadvantaged or really harmed by activity in the marketplace. So we have to take action. It's overdue, and so we are doing that.
Mr. Chairman, thank you so much for being here this morning and, of course, for your leadership. Paul Atkins joining us this morning. Thank you, sir. We'll be right back.